All right. Thank you so much, everybody, for joining us today for Bookkeeping for Your Business Part 2. If you have missed Part 1, I will post the link in the chat so you can go back and rewatch it at your convenience. But a little bit of housekeeping first. We do ask that during the presentation, you do keep yourself on mute. During the question period, though, you're more than welcome to unmute yourself, or if you do not feel comfortable doing so, please feel free to put your questions in the chat. We will be recording, so if you do not wish to be part of the recording, please feel free to turn off your camera. Also, coming up on November 23rd, we have our Paro Summit Gala, where we'll be celebrating women entrepreneurs from across Ontario. Nominations for the awards, though, are closing September 6th. So if you know of anybody that deserves to be nominated and recognized, please feel free to nominate them. As well as early bird pricing ends on September 15th. So get your tickets soon. Otherwise, I'm going to hand it over to Gigi and take it away.
Thank you so much, Kyla. Wow, I am struggling this morning.
You need some coffee still, I think.
Yes, I do. I'm sorry, Kylie. Welcome, ladies, to today. Give me a moment to get myself put together because today has been a morning. I hope it is not pouring rain wherever you are. And if it is, we can sing the Rain, Rain, Go Away song together. Can you tell I'm a mom? All right, I'm sharing my screen with you already. That's wonderful. We have somebody else coming in. So welcome to today's presentation from Para Center. We are so happy that you are here and with us today. We're going to go over just bookkeeping part 1 as a overview as well. For anyone who did miss it, just so you know you're kind of caught up and you can watch the past presentation link like Kylie had mentioned in the chat box, I believe. So as a bookkeeping record review, we know the importance of maintaining up-to-date accounting records and files. And if you don't, you will learn. As a past business owner, I know that I have struggled right before tax season, not even tax season, like the last day of tax season, getting all my receipts up to date. And it is a pain in the ass. So doing it on a weekly, daily, monthly basis, whatever it is so important. Keeping track of your purchase and transactions, you can claim back your HST to reduce what you pay in taxes. So knowing why you're collecting transactions, keeps motivated on making sure that you are. Understanding your sales and income transactions, payroll records, HST, the remittance documents that you get from the government, collecting your bank statements, any canceled checks, and making sure that everything is posted accordingly. We also went over in bookkeeping part 1, how to maintain your accurate bookkeeping records that allow you to know who owes you and who you owe as well. There's wonderful apps and things like that as well now to make that a lot easier. We can move on from Excel if some of you are ready to get past that. And it really helps understand, what went wrong in the year or what months were really hard for you to get by, understanding poor judgments, financial decisions, what month costs you a lot, how much margin you're actually making, because very often we don't know what that looks like. But looking at our bookkeeping, keeping track of it allows us to really see where the money's coming in and or if more money is going out. It allows business owners to understand their business and make comparisons from month to month, year to year. As well, when you're applying for loans, grants, funding, you need to be able to provide your financial statements. So having them up to date definitely helps. Another thing that we had gone over last time was little bookkeeping tasks to kind of keep you on track. You can have your cash receipts, cash payments, cash checkbook payments, and bank reconciliations. And now we're getting started on sort of what we're doing this week or on this webinar. Understanding when you're opening a new business, what its purpose will be, if it's a service, sales, or manufacturing. And based on that, your bookkeeping does vary slightly. And it's just the processing systems that you would use as well that would help you with the bookkeeping in terms of that. So for example, with sales, using a POS system is very useful. You're probably going to have some sort of equipment in your store or on your website that tracks your sales coming in. That would be different than a service-based industry, right? In a service-based business, it could be a monthly contract or it could be an ongoing thing where you're billing people differently. So what you can use for that would be a lot different than a very active POS system versus manufacturing. In service businesses, we're going to break this down. You're selling your services. You have no inventory, generally speaking. It's courses. It could be, if you're a life coach, meetings one-on-one, and other things. But you would be including your overhead costs, your labor, any supplies that you might need, things like that. In a sales business, when it comes to what you're keeping track of in terms of bookkeeping, it's buying and obviously reselling of your products. It's your supplies, your inventory, the equipment that you need to make your product, dealing with the finished goods, the cost of inventory. I'm really sorry. I have children coming in. I'm going to quickly mute myself. Sorry about that. And on top of inventory, you're going to have different methods to keep track of your stock as well, especially if you're doing an online business and you're shipping your product in overseas. Making sure that you're able to get your shipment before your product runs out is very important in keeping your business afloat. In manufacturing, you're really looking into the makes or the produces of products. You're looking into your overhead costs, mainly in terms of material supplies, labor. If you have any, that's what I'm looking for. If you have contractors as well, they would kind of fall into the labor portion of it. In terms of inventory, you're looking at the raw materials, the work in progress, and those projects can take a long time, depending on what they are and what the end product looks like. So making sure that you have different categories that you can enter in different expenses under, very clear categories, really helps you keep on track when it comes to your bookkeeping and just understanding your expense sheets. Makes it really easy for your accountant at the end of the year too, especially if your dad's your accountant and refuses to do anything else. So organizing the information is very important. We have different categories. One of them would be assets. Under assets, you have business properties, tangible things that you can touch, see, vehicles, equipment. Intangible things, examples are money owing from customers. It could be cars, houses, boats, furniture, TVs, appliances. And obviously you have to take this information and then base it on your own business, right? On what your personal assets are, it would be very different, but it can be in the round ranges of having cars, houses, boats, etc. You have your liabilities as well. And all of this information goes on your balance sheet, by the way, which we'll get to at the very end. So any liabilities are like, your credit cards, any loans that you have. So any claims by creditors, any money that the business owes. So this could be for if you're ordering product in, if you haven't paid your full invoices, things like that. Any purchase of supplies, services, things that are charged but you pay later. So accounts payable, loans, mortgages, things like that. You have your own equity and capital as well. And this can be the company's equity and capital as well. So your assets, rights to property, things like that. And it comes down to withdrawals, losses, net profits. Sometimes these things are very scary to read, but our goal is to be able to understand it just at a point where we know what's going on in our business and we can create and generate a simple sheet that allows us to take control of our business and not fear what we don't know. And this is me, just not blonde hair. Owner's investment. So anything that you've invested into your business, it increases your equity or your capital. And you really have to think about what your investments are into your business. There's equity, there's, your laptop, things that you've already put in sometimes and things that you need to put in. And also your personal withdrawings. And that's paying yourself from your business. It decreases your equity, yes, but it is also, money that you're taking out for yourself and keeping track of what you're paying yourself. And very often the idea of paying yourselves is sometimes non-existent. but we do use our business accounts for groceries one day or whatever it is. That's a personal drawing. So making sure that we keep track of all those things is very important. In terms of revenues and expenses, when you're looking at your revenues, it's obviously income that's coming in from the business, from selling services or products. It could be rental income, interest income, depending on how your business is set up. And this helps us understand what our net profit, loss, or gain looks like. Revenues for businesses can come in from online sales. It could be in-person sales, trade shows. You can have multiple revenue streams. So keeping track of all those streams is also very important. Same thing with expenses. Little things come up. I know when I used to do different types of flea markets, you'll run and grab tomatoes from a different vendor, or you'll run and grab whatever it is. Keeping track of the little expenses, especially cash expenses, is very, very important. Yeah, it's a cost of doing business. So this is just a summary of the different categories that we talked about. These will reflect on your balance sheet. So just to understand them, is your assets, liabilities. That will be the difference between that is your net worth. Your revenue and your expenses will generate your net profit if you minus your revenue from your expenses. This is just looking at it from a different perspective. So your assets, again, just as a summary, is cash, the money that's in checking or savings account, accounts receivable, automobile, anything that you would think of as an asset to your business. Liabilities are things that you have to pay out, salaries, EI, WSIB, taxes. So that's HST that you're collecting. Have an idea of taxes that might owe could be a potential liability, but anything back out as well. Equity, your retained earnings, and money that you're going to be making on an ongoing basis. Your revenue is all of your income streams, interest earnings, and any other income coming in. Expenses, I think kind of go on, but understanding what you can claim really does help when it comes to how much taxes you're going to be paying from your business outwards. So advertising, promos, any licensing, membership fees, any trainings that you might have taken to understand equipment, your insurance costs. Sometimes you have multiple insurance. You have business insurance, you have car insurance, especially if you're driving and making deliveries yourself. You can have IP insurance. There's different insurances, making sure that you're getting all of them. Office expenses, supplies, workshop supplies, telephone, internet. We do have different templates that we provide as well. So you're more than welcome to reach out to your counselor, and they'll be able to provide you with, a template to kind of get started and take a look at. I personally love using Zoho Expense as one of my favorite go-tos, and our Square as a POS system as well. So just understanding or being able to read your statement. I'm so sorry, my windows are open in the house, on what that looks like. So when it comes to revenue, you could have different revenue streams, but that would be everything coming in. Your expenses are everything that went out. The total of that minus that would equal your net income at the end of the day, when you look at it. Okay. Any questions about this at all? Okay. And your balance sheet. I think balance sheets have been my least favorite because you do also have to figure out how to balance them out, taking consideration your bank statements, things like that. But just taking a look at it in terms of assets, you're looking at liquid cash that you have, your capital assets, so things that are tangible, but you can't actually sell right away. They do count as assets, as your equipment. It could be your storefront if you own it, things like that. Your liabilities, your bank loans, anything that you owe forward. It could be your car loan, mortgages, things like that. Equity is your contribution. Your net income would enter or end up being your total equity. So just in understanding or being able to read it, it's just understanding what each of those categories really means, and where your money really is sitting at. And that's it for today's presentation. I wanted to just thank you for being here. If you ladies have any questions, please do ask away. I know that we sort of went through things quite fast. So I'm more than happy to answer any questions or, share challenges, things like that. Everybody's very quiet this morning.
Yeah, we tend to keep this one a little shorter so that people can ask questions from part 1 and 2, if anything. So people are, again, more than welcome to unmute themselves and ask their questions. Again, if they do not feel comfortable doing so, you're more than welcome to put your question in the chat.
Would anybody like me to share sort of like a cash flow and what that looks like and how different expenses vary? I'm going to just close my door real quick and I'll let you guys answer.
Yeah, I think that would be a great example. Yeah, we have Felicia would like to see it too, Gigi.
Awesome. Give me one moment and I'll pull up a few different examples. So I'm going to share with you what a completed cash flow looks like. Share screen. Is everybody able to see my screen?
Yep, you're good.
Awesome. So when it comes to projecting your cash flows, I like lining them out for the entire year. So you're able to enter in data as you go along. People do break it down daily. I think personally it's a lot, and being able to use POS systems allows you to track your daily sales. But in terms of months, what I do is I'll add in all the things. So up here at the top right left-hand corner, we have revenue in our expense sheet. And it's different revenue streams. So like I mentioned, for this one, we have distributor sales, direct sales, retail sales, plus a loan coming in. And calculating all of that. When those incomes are coming in as well is very important to know. Or as you record them as well. And that allows you to see the reason I think it's very important, the fluctuations. You'll understand. So, for example, in August versus September, you'll see a fluctuation. October, December, January, and February, the fluctuation is very high. Managing your expenses accordingly is very important. Otherwise, that's when we're in the red zone. Understanding why there's fluctuations. So in this particular case, because it's an educational product that's being sold, there's fluctuations when the kids go back to school, and there's teacher conferences and things like that. So understanding what your market is and being able to see it year to year really allows you to compare, okay, this month I need to kind of tone down on spending money. And these are the ways I can increase my sales. So for example, July is very low. Expenses. Expenses differentiate based on business. This is a sale or a product-based business. So we have inventory cost, marketing equipment, mailing supplies, telephone, internet, POS hardware, software charges, graphic design charges, advertising, website, bank fees, accounting, legal fees, consultant fees, trademark fees, IP insurance, business insurance, loan payments, what that looks like in terms of interest and things like that too. And when you have a really good Excel sheet set up, this is in very big detail, but you don't need it when you're having someone else do your accounting at the end, is really having it all come together in terms of it being calculated, what your net cash and all of that looks like, what the accumulative looks like, and what those numbers look like. So if you look at the months down here, in terms of net cash, the expenses are a lot higher than the cash coming in. So knowing that ahead of time for like the next year, okay, these months are my slower months. How do I reduce my cost of that month and or increase my revenue? What can I do? Is it different trade shows? Is it taking on more clients? It really allows you to do a deeper analysis of what your year looked like and where you did well and where your struggles were. I'm also going to show you an income statement. So this is what that would look like at the end of the year. You have your sales, your profit, your operating expenses, your total expenses, and your net profit before tax. And this is the balance sheet we're looking at. So this is what it would look like for, you know, a real business, fixed assets, your own capital, your liabilities, And what's the last one? Oh, no, that's it. And just breaking that down, understanding your total assets and your total liabilities versus equity. And this will change year to year, right? So really just being able to set yourself up for success from day one is very, very important. Any questions about that or anything you want me to dive deeper into? Okay.
All right. Well, thank you everybody so much for coming. I will again post in the chat there if you missed the part 1 of bookkeeping, the link to where you can watch it. Or if you've missed any previous webinars that Pero has hosted and you wish to rewatch them, please feel free to send me an email at communications@pero.ca. I've put that in the chat again. And don't forget about our gala coming up on November 23rd of this year, and we hope to see people there. Thank you again, Gigi, for the wonderful presentation, and I hope everybody has a great day. Bye-bye.
Thank you.